There is also a valuation. The stock market is more expensive than it was 2 years ago. So the markets may be a little less patient if there are any stumbling blocks. And the third risk, in the second half that emerges is that there are things that markets will start to worry about, like deficits and the potential ending of the business cycle in 2026. So I think that those are the things that weigh on markets in the second half. Our research sort of foundation, one of the keys is the idea that history serves as a really important guide.
Tom Lee highlights optimism for equities in 2025, driven by pro-equity policies, easing central banks, and a cyclical recovery. Businesses are regaining confidence after years of caution, and emerging markets may outperform due to lower valuations and global stimulus. However, risks like elevated valuations, fiscal deficits, and a potential business cycle slowdown loom in the second half of the year. AI competition is intensifying, with Nvidia maintaining its lead but facing challenges from rivals like Broadcom. Big tech incumbents, including Amazon and Google, are poised to grow as AI becomes more integral to their businesses, though differentiation and regulatory hurdles remain critical. The race to monetize AI innovations will define the year.
The president is very pro-equities, so I'd call that a Trump put. That's a tailwind. We know businesses have been cautious for the last 2.5 years because of the combination of the pandemic and the repercussions on the labor force, plus the inflation wave, plus a Fed that was trying to quash inflation. So I think animal spirits return. So these are the tailwinds that are positive for equities in 2025. But the drawback in our view, or the headwinds that emerge, is one, there's a lot of promise about potential initiatives in 2025 that I think become markets have to reckon with it. I think that comes in the second half.
Now, I want to talk about Nvidia dipping into correction territory, the fate of TikTok once President-elect Trump takes office, the parade of tech CEOs making their way to Mar-a-Lago, and so much more. Joining us is an expert on all. Jessica Lessin is the founder, editor-in-chief, and CEO of The Information. Good morning to you, Jessica. We can take them in order. We can go however you like. I think a lot of folks are curious about sort of where Nvidia lives or stands right now, given that the stock has taken a hit and that Broadcom and others seem to be now at least playing or trying to play in the game. Can they?
I think they can, Andrew. I think 2025 is going to be the all bets are off. Or all gloves are off, rather, in AI competition. So yes, Nvidia will dominate GPUs, but you're seeing Broadcom and others really partner with tech companies to diversify. We reported last week at The Information that you have Broadcom now working with Apple on an AI chip, on inference. Right. So it doesn't directly compete with Nvidia, but there is a ton of competition happening. And so I think investors should be very vigilant and really trying to understand that deep inside every tech company, the answer is how can we build to have more optionality in the AI tech stack?
TikTok and China.
TikTok.
What do you think the chances are? January 19th is the day.
You and I have been covering this for some time now. It's just like, could we be nearing something happening here? Look, I think we take Trump at his word that he has a soft spot for this company. And so I think there's some sort of delay that takes effect here. Personally, I believe the most likely outcome is that there's some sort of partner out there for parts of TikTok. I find it hard to believe that this service will absolutely go away. But man, that is going to be a diplomatic challenge for Trump to pull off, given the issues with China. But based on his statements, I think he's going to try. And so I think we get a little more time.
How much does it become a diplomatic sort of tariff story, meaning that this is part of a grander chess piece in this negotiation
Absolutely.
with China?
This is the chess piece, or one of the chess pieces at the start of his term. I wouldn't be surprised if all his friends, all his advisors, all his folks with ties to China are bending his ear on how they could help. So it's going to be very interesting to watch. And I think he'll try to make a move. A compromise seems likely here. It seems unlikely that he would let a full ban go through. It also seems unlikely that he's not going to let all those who are really concerned about national security in China, who he's supported, not get their victory here. So right. I think he'll find something in the middle.
talking about bending the ear, let's talk about the pilgrimages, plural, that CEOs are making at Mar-a-Lago to bend the ear of the president-elect. What do you make of it? Do you think it's unique and different than any other period in time? We have obviously a lot of companies that are now giving to the inaugural that have not given in the past on either side, and what that really says.
You know, what I hear from these conversations, Andrew, is everyone wants to know what the regulatory field is going to look like. They know that Trump is going to come in. They're hopeful he's going to come in and bust through some of this regulation. But, you know, should they be trying to sign those big M&A deals in January? What are tariffs going to look like? So I think these conversations are a lot along those lines. I think they're pretty typical in the course of business. I got to tell you what I don't think is typical is how many people out here in the Valley want everyone to know they were at Mar-a-Lago. So there's certainly a vibe out in the air here that a lot of people who want to rub elbows, whisper in ears, these are probably not the core advisors, but the group right outside that. But I think if you're talking about Zuckerberg, Cook, Sundar Pichai, you know, of course, these people want to engage. They want to understand the landscape. And time will tell how those relationships evolve. It is certainly going to be a big story next year.
Well, that's what I was going to ask. Do you take at their word, for example, you know, Sam Altman has publicly said he doesn't believe that, you know, the closeness, for example, that Elon Musk has with the president-elect is going to impact his business, or Jeff Bezos has made similar comments? Or do you think that there is a concern and worry? The Wall Street Journal had a big story suggesting there was. They, of course, came out actually speaking to me at DealBook saying that they were not concerned. But there's obviously lots of speculation in the Valley, and I'm curious what you know.
Yeah, you know, I quoted that great quote you got out of Sam Altman to someone at OpenAI who kind of like made a face, being like, of course we're paying attention. I don't know what levels of concern, you know, they're at, but you know, it's the company's job. And especially in AI, I think AI is one of the areas that actually is more open in terms of the Trump administration's views on policy. And so it's certainly one where every CEO is getting in line to make his case.
Just to circle back on AI and to bring it maybe full circle on this, how do you look at the large language models right now? I mean, we keep talking about, you know, chips, and the chip makers are really the winners, at least on the short term. The question is, what about the big tech companies? Google had a very big week. Sundar had a very big week last week, both with the release and announcement around the quantum chip, the new Gemini. Obviously, OpenAI is releasing new things almost every day now. How do you see this actually playing out? Amazon now playing in the large language model game too?
You know, it's my view that AI is going to turbocharge the incumbents. I think each of the companies you mentioned, Andrew, has a tremendous opportunity to grow their business with AI. I think LLMs, I mean, and everyone is saying this, including Satya Nadella and others, are becoming more commoditized. And so, you know, we're past the phase of how many parameters. I mean, the researchers will always compete on that metric. But next year, we are really going to see how are the big companies making more money from AI? Because we know they're losing a lot and investing in it. And I actually think each one down the line, from Amazon to Google to Meta and so forth, has a tremendous opportunity to grow their business. We've seen it show up in earnings already. You know, the question is, where is the longer term differentiation? What is the government going to do from a regulatory standpoint? Who's going to be next to the next big breakthrough, which will come? Although I think you can assume that will be spread out too. So it seems like a very tight race on a lot of fronts. I mean, even seeing Apple using Amazon chips, which they announced at AWS, you know, that surprised me. That made me realize Amazon is more in the game on chips than we had realized and perhaps the market had realized. So it really feels like an open race on lots of fronts.
And what I've been struck by is that if I take the US versus the DAX, for instance, any more than 10-year period, the returns, the nominal returns between the DAX and the S&P should be very similar. And the starting point for non-US markets is a much lower valuation. And in 2025, if we're talking about animal spirits coming back because of central bank easing, and that's a cyclical upturn, well, outside the US, there are many cyclical companies, you know, industrials, financials, banks, exporters that should benefit. And so I'm not opposed to the idea that next year, if the S&P could essentially feel like it's treading water next year, could emerging markets do better? I think so. And, some things to watch are like China, because China is unleashing some stimulus. And if China's leading, I think it does mean rest of the world does quite well.
Tom Lee highlights 2025 as a year of mixed prospects for equities. While central bank easing and cyclical recoveries could boost emerging markets and global growth, risks like high valuations, fiscal deficits, and business cycle concerns may pose challenges, particularly in the second half of the year. Emerging markets outside the US could benefit from their lower valuations and cyclical industries. AI competition is heating up, with Nvidia maintaining its lead but facing pressure from rivals like Broadcom. Major tech firms like Google, Amazon, and Meta aim to monetize AI advancements, though regulatory hurdles and market differentiation remain key challenges. How can investors balance opportunities in emerging markets with potential headwinds in developed markets? What role will government policies play in shaping the competitive AI landscape?